welcome to PreciseAlgorithmTrading.com. It is Thursday, March 21st, 2024, and the markets are still really moving forward bullishly. So let's dive in right here and look at our automated trading systems. This is the Dow futures and our trades for today. 321. That thing's been actually advancing pretty well, but today we had a lot of just back and forth. So the Russell here, it's been advancing again, not back up quite to the equity peaks, but still nice advance here lately. And that is the nature of trading. We're going to get into some new things tonight on this, but this is all really just for educational purposes. I want to bring that up just because, just like this equity curve right here, trading is a series of wins and losses. You can't eliminate the losses, and if anybody out there has found a way, let me know, but I don't believe it's possible. What you're looking for is an equity curve that goes up from bottom left to upper right, and that's what this does. It just doesn't do it without pullbacks, which are the series of losses along the way. And so we've had this series of losses here, but it's gotten negated pretty quick by that series of wins. So that is the nature of trading. These systems are intraday and they're very active. Most trading systems really aren't this active, but you can see here that the NASDAQ, it's a really nice equity curve from lower left to upper right, but you have to endure these pullbacks like any trading system. So this is today actually was a give back day on this trading system, but one of these days we'll get another trade like that, or even a series of those types of trades. So and again, trading is it's really it's your own business, it's your own risk tolerance, and we're here just to help try to explain some of that stuff and how it works. And I know I also even talked about not showing these automated trading systems, but this is actually my nightly homework, and I have to do it anyway, so I just record it and put it out there. So alright, let's jump into the manual trading systems, and I'm starting here again with the Dow Jones Industrials because their high today was 39,889. They closed at 39,781. They're up 269 points for today, and I've been projecting and calling out this 40,000 level, and I think we're just I think it's just bound to happen now. So I thought it was pretty bound to happen. We got up close to it anyway, and it just acts like a magnet. So it's a psychological level. Now the bad news is once we hit it, we might blow through it for a little bit, but I think this run will end. It could end badly. A lot of times they do. Going back on the charts, you'd have to really do some history if you wanted. I don't recall when the 30,000 level was hit. I remember I was sort of paying attention to the markets back then, but I'm thinking it was more than 15 years ago. So and again, you can go look at psychological levels like that and see what happened in history to kind of get what could happen this time around. Okay, so the Dow went up that much, the S&P went up 0.32%, the Russell went up actually over 1%, and let's look at it real quick. It's actually has been on a new buy signal and advancing, but kind of in a very obvious zigzag pattern here. I'm actually waiting for a pullback to potentially buy back into that, and I'm using the IWM to do it. I'm just waiting for one of these types of levels here to get hit before I evaluate getting in. What else? The Nasdaq went up 32 points today. It's just still cranking higher. We do have a change in polarity. I'm not sure if it's once we got past this old pivot right here on the hourly, it pulled back pretty hard. So, but again, I don't think there's any stop in the general overall market to be able to help push the Dow to 40,000. It's just not that many points away anymore. And what's the S&P look like? Like that. So the oil market is advancing, but it's on a little pullback right now in a very volatile, I guess I'll call it, up and down kind of pattern. You can see that it's trending up for sure. This is a rounded bottom pattern as well. My oil on USO, I mean, that was the target I drew a long time ago, and we are just a little ways away from it. TLT, so bonds, there's really nothing to get long about here as far as buying in. I think you'd need a couple things to happen before this thing was really ready to go, if it goes again, but it sure seems like this impulse wave here should get, I mean, it looks like it's getting itself back together again after really what's been a pretty amazing fall back here. So be careful with bonds. Know your risk, know your stops, and just make good decisions. So the transports went up today, and they've been just really back and forth sideways as well. Possibly broken change in polarity over here, but again, that would just kind of work its way into the transports. If the industrials are going higher, the transports really should be too, and if they decouple, that's a bigger problem actually. And just for fun, well, more than fun, let's look at gold. It's looks like it's trying to advance again, and BITO is the Bitcoin ETF strategy. It's got to unwind a little bit before it thinks about advancing again, it looks like to me. Okay, some new things to throw at you, or actually some continuation of these. This is the McClellan oscillators, and we're back. Both of them are above the 60 level, which is considered overbought, but you can see it gets quite overbought, or it can. And I was going to go ahead and redraw or move this because it just blew out of that pattern, that rising wedge. It's still a rising wedge, it's just not as much like a megaphone pattern. And I could probably make the argument to tighten that up. So maybe not that tight. A lot of times, and I'm going to say almost all the time, when you have a triangle pattern, and I've talked about this before the apex of the triangle, when it actually comes together, is where you'll get the final move out of the triangle. In this case, all rising channels eventually are broken to the downside, and all descending channels are ultimately break to the upside. The trick is timing that. There's a lot of talking heads and pundits that say don't try to time the market. You can see that that's exactly what we try to do. We're not perfect at it. You don't have to be perfect to make money. Alright, here's the VIX, and you can see the VIX is toying with the lower Bollinger Band again. So this is going to be a be careful situation. I can actually think that, you know, what could happen is it's going to fall below the lower Bollinger Band for a little bit while the Dow takes out the industrials, and or while the industrials take out 40,000, and then this thing could be back off to the races. So we'll see what happens, but this is just it's interesting to watch and help us judge how bullish to be, or you know, how much gas to be putting in the tank, really, as far as like your, you know, how much do you put in cash on the side. And then this is the one that I've not really, I don't think I've ever shown it on here before. I track this as a, it's more or less a case study, but this is the advanced decline line, and these are for the S&P. I think that's, well, this one down here is the NASDAQ, and I don't recall what that one is, but they're all different markets. The ADD, I'm sure if I retype that in there, $ADD, yeah, the NYSE. So again, looking at the main indexes or indices, and also these ticks. So what do you see? Well, the ticks right now have been between 600, which makes them not very volatile. And what are ticks? Ticks are each individual trade, and this is set up in 3-minute intervals. So the candlesticks are 3 minutes, and what you see is when they get out of whack back here, this is the volatility that kicked in for the Fed announcement, and it got to where it was up into the 1,000 range. And when it starts to do that, that's a very bullish condition. When you get into the negative 1,000 range, which doesn't even show up in the last 2 days, because that's what I'm showing here. I'm showing 1 day's worth of data here, so I can kind of track it. But I'm going to open this in a second to 2 days. Something you see is trends. So the NASDAQ here, you can see when it got up and then it started to pull back. And now that it's pulled back this far, I'm almost expecting at some point for it to pop the other direction. And it could do that in the morning, and then it could still fade into the end of the day, because tomorrow is Friday, and usually Fridays end where people start wrapping up. And you know, I can't, the way we trade, the accounts generally go down on Fridays, and that's okay. Sometimes usually they come back on, you know, Tuesday or something like that. So let me open this up and show you 2 days worth of data, because you can see things when you look at data, and basically anything that can be charted like this I think is handy. But you can see we got the advance going into the Fed announcement, and then the volatility kicked in, and we really got the advance there. So that's got to be 2 o'clock. Yeah, 2 o'clock Eastern Standard Time, and then it really got off to the races, and we've just been pulling back for the most part, or going sideways ever since. So the next question is, well, if this thing drops here, then you can expect, well, and that's all it is an expectation that it might rise for the rest of the day. So you can see when you drop out of the gate like this, then it starts to fall. Well, if we get a drop because this thing, and this does work with support and resistance. This is sort of a support level down here. If it drops down here, you could almost expect a rise, but you can certainly watch it. And so anyways, I think it's helpful. It's not always helpful. especially when all we're doing is following a trend. So we're not really playing much in the way of intraday. So, but it could help with entries, and just general like understanding the flow of the market. So, all right, and then I'm gonna stop that and go over here. And I haven't shown this in a while, but this is at truemarketinsiders.io/BPI. It's right there. And this is not ours, and this is uh, it's they put it out as a free piece of information. Looks like my screen's deciding that it's become nighttime. So, anyways, this is a handy tool. I don't show it a ton, but right here, it's up 1.12% today. It's at 52.67, and it's all it needs is to get to 54 for a new X to go in here. And this has been, in my opinion, the reason why the markets really haven't sold off hard, even when the bullish percent indexes that we look at every day roll over, because this thing's been in a column of X's now since November, or actually since sometime in October last year. I think it says right here. Oh, there it is. The recent change went from O's to X's on November 15th, 2023. This write-up that they do in this website is really nice. You can open up individual times back here where you can see that their write-up, what their write-up was, historic, I believe. So they've got some great information. I've learned a lot from them over the years, and anyways, it's just a good tool. All right, let's go here and wrap this thing up. We're gonna put in our point and figure chart and type in bullish, and look at all the bullish percent indices, and here's the industrials. Remember, those things put in a new point and figure buy signal. I think it was yesterday, but I wouldn't swear to it. It was recent though. Here's the NYA. A new column of X's in the NYA, up 1.78%. Dangerous in the upper zone like this, but you know, it's been all as high as the 80 mark back here just in relative recent history, although that was 2021. That doesn't mean we can't get there though. So the transports flip to a new column of X's. This is showing some pretty strong underlying strength. The NASDAQ up 1.38%. The S&P 500 up 3.08%. The S&P 100 tacked on a new X today, and it went up 2.78%. And the NDX, which is the NASDAQ 100, advanced to a new column of X's. So this level of support, we didn't even really get close to it, which is just fine. That probably means that even when it rolls over, we're probably not going to get too bad, but we'll see what happens when the time comes. That's up 18%. That's a big deal. So there's a lot of strength under the hood here, and it's defying gravity at this point. So that's what I got for the night. I hope it helps, and hope everybody's doing well in this market. Take care, guys.